Hello traders and welcome to another video review. Today is Tuesday, 2nd of February 2021. Let's take a look at the Forex calendar. What is going on? As you can see, on Tuesday we got some news that were released already during the night. We got RBA interest rate decision and RBA monetary policy statement. The Australian bank has kept the interest rate at the same level, 0.10%, so in line with the forecast. So we will definitely take a look on the Australian dollar to see how it reacted on the event. During the London session, we don't have much imported data except the Eurozone GDP, which is revised for the fourth quarter. This data is scheduled for release at 11 o'clock a.m. As you can see, the GDP is going to be minus 0.9% versus the last quarter 12.5%. So this is a completely different data. As you can see, this is minus GDP, which is not very good. Of course, the reason is the coronavirus pandemic. Very poor New York session. As you can see, only the TIPP economic optimism data are scheduled for release at 4 o'clock, but there is something going on late in the night. We got some data from Australia scheduled for release since 10:30. We got AAG construction index, unemployment rate. Those data are from New Zealand, and employment change. Those data are from New Zealand as well. Participation rate, level of wages, and PMI manufacturing, 11 o'clock PM from Australia, and anything else, and NNZ commodity prices and building approvals. Both of them are from New Zealand. So bunch of data from the Australian and New Zealand economy. As you can see, the unemployment rate is scheduled at quarter to 11. And forecast is 5.6. So actually, for the fourth quarter in the New Zealand, the unemployment rate is scheduled to is forecasted to increase to 5.6%. But the employment change is 0.1%. So that's not that bad. The participation rate should decrease, increase to 70.2%. So let's take a look at the Australian dollar, New Zealand dollar, and I think we should then take a look at some other interesting pairs like a US dollar index and gold. So short update on the USD to the Japanese yen. As you can see, we almost hit 100% of the Fibonacci extension, 105.12. This is the target level. So if we hit this level, we can label this recent move up as a ABC. So this would be the bottom, this would be wave A, this would be wave B, and this would be wave C. Now, if there is no violation of the level of 104.41, this might be 1, 2, and 3. So what we are missing here with this structure to be impulsive structure is wave 4, which cannot go below, as I said, 104.41, and then wave 5. So the key level here is right now 104.41. Please keep an eye on this, because it will depend whether this will be ABC correction or maybe some sort of impulsive wave development. Yeah, okay. Australian dollar is going down, just in line with our recent expectations. As you can see, we got this wave 5 on the chart. We got the end of the rising market, and this short-term trend line here has prevented any kind of a rally so far. So we are entering the corrective cycle. The top of the wave 3, located at 7,643, had been violated already. We got a new low. This low had been made on the level of 7,593, and I think we should label this low around here. And now, of course, that would be technical resistance, would be color coded red. So right now, as you can see, not much of a decision here on the Australian dollar. We got these 2 days, the 2 recent days, with the upper longer shadow, and I think there is some kind of a bearish pressure building. So if the low from the 28th of the January is violated, 7,593, the next target is 7,483 for the best. Yeah, so please pay attention to the Australian dollar. We are continuing the corrective cycle, and the New Zealand dollar, as you can see here, the New Zealand dollar is not going down that much yet. Nevertheless, the level of 7,233 had been rejected already a couple of times, and I think that this would be the key level for the next, eventually next movements. As you can see, there is no new low, so I'm moving this this line around here. Let's say this would be the correct level for the, yes, for the technical resistance. So we got 7,244. We got bearish engulfing here. We've made almost a new low, so we just mark this low from the 18th of the January as our key short-term technical support, 7,092 pips. Right now we are just bouncing up and down around the old levels here. As you can see, this zone had been violated already, but we are trading below this this short-term trend line. So as long as we are trading somewhere here, there are still the chances for another leg lower towards 7,092 and even 7,000 pips. So bearish pressure is building. As you can see, the momentum is barely over 50 points. So if we have a breakout lower, this might end up as a sell-off on the New Zealand dollar. I promised US dollar index. Let's take a look at the US dollar index because interesting things are going on there. Let me just adjust the chart. There you go. This is our chart on the US dollar index. Just a couple of zooms here and we will be fine. So the key lever, the key moment for this market is about to come. 91.1 points. This is the level that needs to be violated, clearly violated, for the market to go towards 38% of the Fibonacci retracement of this wave down. And then of course we got some other technical resistances and other Fibonacci levels. Those are targets for the wave 3, for the wave C, yeah. Which will be hit, I don't know that yet. We got some of them on the screen right now, so we are just waiting for the market to tell us where is the target for the wave C. One of these levels will definitely be a game changer. Of course, currently the key level is 91.1. We are waiting for a breakout higher on the US dollar index if this level is clearly violated. And let's take a look at the spot gold market. What is going on gold? As you can see, there is kind of a consolidation here between 1,875, which is the key short-term technical resistance, and of course around this level of 1,833. So this consolidation had been developing for almost last 2 weeks. So right now we are just waiting. I think that there might be some sort of let me just erase this channel. It's not important anymore. If we just do this as our trend line, short-term trend line, then as you can see we are getting closer towards 1,833 and then 1,817. We can even adjust our level towards 1,811. So this will be the lows of the 18th of the January. Any violation of the trend line will likely result in a test of 1,811, and then of course if we break even lower, that would mean the market participants will sell the gold and buy US dollar, which means eventually the US dollar index should rally higher, which is in line with our current scenario. So please keep an eye especially on 1,875, because it's a key level, and then eventually on the 1899 to the upside, and to the downside is 1833 and 1811 on the spot gold market. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Bye bye.